Hello, welcome to F3 Financial Accounting. Today we will be learning about accruals and prepayments. So, when we're talking about accruals and prepayments, we need to consider the definitions carefully. So, accruals and prepayments is based on the matching concept. What is meant by the matching concept is that revenue that is earned is matched with the cost incurred. So, when we're talking about earned and incurred, that does not necessarily mean that it has been received or paid. So, the words earned and incurred mean that something that has already happened. So, earned, let's say I've done a service for my customer, so I have earned my income from them. However, maybe they have not paid me yet. So I may have not received my income, but I have earned it already. Same for an expense. I have already incurred a rental expense for this month, for example, but I have not paid for it yet, and so I owe a liability to my rent tenant. So the words earned and incurred follow the accruals basis, whereas for received and paid, these refer to the cash basis. So please note the difference between the two, because when we're going to calculate for accruals and prepayments, we're going to have to calculate using the accruals basis. So even though I have not paid my expense yet, I still need to recognize it as an expense if it falls within this year. So maybe throughout this financial year, I've already incurred a total rent expense of maybe $10,000. And let's say for 1 month, I'm supposed to pay $100 and I've already incurred it, but I just did not pay in cash yet. So even though I did not pay for it yet, it's still a rental expense. Okay, now let's take a look at this chart. And here I've listed out a comparison between the accrued expense, accrued income, with a prepaid expense and a prepaid income. So the treatment is going to be different for both because they're individually going to affect the statement of profit or loss and the financial position. So let's begin with accrued expense. So the accrued expense is arising this year, meaning that I have an expense this year, but I may decide to pay for it next year. Okay, so basically the payment is delayed. So even though I have not paid for it this year, it's still an expense that has been incurred. So I will need to recognize in accrued expense and add it to my total expenses in my profit or loss statement. Now, if my expenses have increased, that means my profit will reduce. Okay? And an accrued expense is something that has already incurred but was not paid yet. So we're going to recognize this as a current liability in our financial statements because we still owe the person the money for the expense that we were supposed to be paying this year. So you could think of this as incurred but not yet paid. Okay, moving on to accrued income. Accrued income in this case is where we have already performed the service to our customer, but they have not paid us yet. Okay, so it's the opposite of an accrued expense. So this is where we're supposed to be earning the income already, but it was just not yet received. So maybe we've earned the income now, but they'll pay us a bit later. So because it's an accrued income, technically we have the right to have received it already, and the income has been earned in this period. So we're supposed to add our income anyway in our profit or loss, and therefore will increase our profits. Well, you could think of an accrued income as your common trade receivable. You sell them the goods first, but maybe they have purchased on credit. Now, a trade receivable itself is recognized as a current asset. Okay, moving on to the next one. Let's talk about prepayments. Prepayments is where you have to pay in advance. Accrued is something where you pay later on. That's a simple way to remember it. A prepaid expense. I am supposed to be paying $500 worth of rent next month, for example, but I already paid for that this month. So what is going to happen in my profit or loss is that I'm going to reduce the total expenses with the prepaid amount. And because my expense is reduced, my profits will go up. And prepaid expenses will be recognized as a current asset in our financial position. So in this case, the concept is we have paid, but not yet incurred. Next one. What if it was prepaid income? Maybe our customer has decided to pay us in advance now, for example, but we did not perform the service or sold them the goods yet. So our income in total should be reduced by this prepaid income amount because we have not earned it yet. So we should not classify it as our income yet. And when income goes down, our profits will go down. Now the thing about a prepaid income is that it can always be repaid to the customer. So we're going to recognize this as a current liability because we may have to owe the customer. Well, technically we already owe them a service, but maybe we need to owe them back the money that they have paid us, maybe if they change their mind. So in this case, we have received it, but it was not yet earned. Now here's a note to consider. The effect from last year is opposite of the effect from current year. This year's total expense or income. Okay, either way the method is still the same. How do we find this year's total expense or total income? We take how much was paid in cash, or if we're talking about income, then it should be received in the current year, and any prepayments that were made for next year should be deducted. Okay, or if we're dealing with an accrual, then we should add the accrual for next year. So let's say we have an accrued expense. An accrued expense should be included in this year's expense. So we need to include that accrual in this year. Whereas amounts that were brought forward from last year, what do we do with them? You'll need to include the prepayment, either prepaid expense or prepaid income from last year. And if we're talking about accruals, we cannot include them this year because they were already included in, let's say, expenses or income in the previous year. So the accrual from last year should be removed. Now one more note, when you're dealing with accrual and prepayment questions, they tend to give you the financial year, which is the accounting year for the company. But commonly they give you the year end. So you need to find the year start or the year beginning. Okay, so for example, if they give you the financial year end, let's say 31st December 2012, the main point is that you have to go back 12 months. So in this case, we go back 12 months, it would simply be 1st January 2012. Now this is if it's in the same year. What if they were in different years? For example, 31st October 2012. How would I go back 12 months easily? One way to do it is to take these and then you take the next day. So in this case, rather than counting with your fingers, 1st November. And then what about the year? Well, you're going to have to take the previous year, which in this case would be 2011. So this is a good tip for when you're dealing with accrual and repayment questions. So now that we've completed that, let's get into the questions. I have taken this question from the BPP revision kit number 10.1. So when handling a question, I recommend you begin from the financial year end. So in this case, they asked you, what figures based on these receipts should appear in the company's financial statements for the year ended 30 November 2002? So we know that the year end is 30 November 2002. We need to find the year start. So we take the next day, which is 1st December, and we take the last year, so 2001. Now the reason why we need to find this financial year is so that you can know which expenses or which income should be recognized in this financial year. So let me explain here. A company receives rent. So if they tell you that they have received rent, the first thing that should come to your mind is that this is income. Okay. Now the next piece of information is rent receivable quarterly in advance. Look at how it says in advance. In advance should signal to you that this is a prepayment. So when put together, we know that we are going to have prepaid income. And remember, the rule for prepaid income is that we cannot include that amount in this year because we have not earned it yet. So whatever we have earned, we will recognize as income. Whatever we have received but not yet earned should not be included in this year's total income figure. Now in here they explain that on the date of receipt, so on 1st October 2001, we have received an amount of 7,500, which covers for rent up until 31st December 2001. Now, this is where our financial year comes in handy. And here we know that our financial year starts on 1st December 2001. Any income that was received regarding 1st December can now be recognized as earned. So let's take a look here. That means we have a portion that we can recognize as earned in this month. But how much? We should only take a third of this amount. Okay? Simply because on 1st October we received 7,500, but this is for October, November, and December. So the October and November we have already recognized as earned in the previous financial year because our financial year ends on 30 November. So when we begin on 1st December, we should recognize that as earned in this new financial year. So for the 1st October payment, we should only recognize a third of that as earned in this year's financial year. And that amount will be 2,500. Now you continue until you reach the year end, because everything else will now be classified as earned as the months have gone by. So let's say 30 December we received a payment of 7,500, and this will cover up until 31st March. So until that time has passed, we will always recognize as earned. So let's say in January, the month of January has already passed. So now I can recognize the January portion as earned. So in this case, we'll take the whole 7,500 because that would have passed and would have met our financial year already. Okay, as we continue, we'll just have to recognize all of these immediately, because they fall within our financial year. That's the key point. Now let's take a look on the 1st October receipt. The 1st October receipt covers up until 31st December 2002, $9,000. But our financial year stops on 30 November, so we can only recognize as earned up until 30 November. So October and November, so that means 2 months. So 2 months out of this 3 months, we can recognize as earned. This will be $6,000. Now, what will all of this be? This will be our income in the SOPL, and this will amount to $34,000. This is our earned income. Now, what has happened to that remaining $3,000 from that last receipt on 1st October? This $3,000 relates to December 2002, and this is not within our financial year. So, we cannot record this as our income now because we have not earned it, even though we have received it in cash already. So now this is going to be our prepaid income adjustment, and this will classify as a current liability, and this will be in our statement of financial position. Let's continue to the next part. Let's read the requirement first. What rent expense and accrual should be included in the company's financial statements for the year ended 31st January 2003? So we know that the year ends, the financial year ends on 31st January 2003. So what are we going to do now? We need to find the year start. So we go take the next day, so 1st of February, but take the last year. This will be exactly 12 months. And now, let's read the information. A company pays rent quarterly in arrears. If it wasn't obvious from the requirement, you should have also understood from the sentence here that when we pay rent, that means it's an expense. And when it's in arrears, that means it's accrued. Now, it tells us that we pay expense accrued on 1st January, 1st April, 1st July, and 1st October. The rent was increased from $90,000 per year to $120,000 per year as from 1st October 2002. Now first, let's clarify for which months are we paying for. When we pay on 1st January, we are paying for rent, but the rent is paid in arrear. So that means the expense has already happened, but we paid later on. So instead of, like earlier, when a prepayment, let's say we pay on 1st January, we're actually paying for January, February, March, for example. But when it's in arrears, you're paying for the months that have already passed. So in this case, because it says quarterly, that means it's for 3 months. So on 1st January, we're actually paying for October, November, and December. Similar to 1st April, we are paying for January, February, and March. From 1st July, we are paying for April, May, and June. And for 1st October, we are paying for July, August, and September. This is what it's meant by in arrears. You incurred the expense first, but you pay later. Now, because it's giving us $90,000 per year, I like to divide this into quarters. So if $90,000 is for 1 year, 1 quarter would be just $90,000 divided by 4, which should be $22,500 per quarter. And then from 1st October, it's going to increase to $120,000 per year. So that means per quarter divided by 4 will be $30,000 per quarter. Okay, so now we need to repeat what we've done in the last question, but this time we need to be careful that it's an accrued expense. So we know our financial year starts on 1st February. So we need to find the payment that recognizes this 1st February amount. So let's take a look. Where is 1st February? Where is February at least? It's covered in the 1st April payment. Okay, so we're going to begin from our 1st April payment. because that is what will cover February. Now notice that the first April payment covers from January until March, but we only need to start from February. So that means we should only take 2/3 of this payment. So 2/3 times 22,500 to recognize February and March only. This should give us $15,000. So next, we just continue recognizing our payments like usual. Now, what about on 1st October? It said that on 1st October, our rental payment would have increased, and we are paying on 1st October here. Should we increase our rent now? The answer is no, because on this date, we are paying for rents July, August, and September, so it's still at the same rate as before. So we should still include at the previous rate until we pay on 1st January. Because on 1st January, we are paying for the months October, November, and December, and starting from that October, our rent has increased. So now we're going to take $30,000. Okay, so we're very close to the financial year end, which is 31st January. So we need to find the next payment that covers 31st January. And we can see here that it's again 1st April. But this time, remember, 1st April is paying for January, February, and March. But we only need to recognize the accrued expense up until 31st January. So that means we should only take 1/3 of this payment. So in total, my expenses in my statement of profit or loss will be $100,000. Okay, so we found the rent expense. We still need to find the accrual. How much is our accrued expense? Which will then be recognized in our SOFP as a liability. So current liability. Now, if you're still thinking as if it was in the last question, where we did 30,000, where we had to take the total payment minus the amount that was recognized, that would be incorrect when doing for accrued expenses, because the treatment is different. If we have prepaid income, we are not allowed to recognize the income in this year's financial statement because we have not earned it yet. But when we're talking about accrued expenses, this expense has already happened, but we just did not pay for it yet. So our accrued expense here is actually this $10,000. Why? It's because in our financial year, we stop until the month of January. And in this month of January, we already have a rental expense of $10,000 that has incurred already. But we did not pay for it yet. We will only pay for it on 1st of April. So that means that is our accrued expense. Okay, here's the next question. Again, let's start from the requirement. Which of the following figures is the rent expense, which should appear in the statement of profit or loss for the year ended 31st January 2001? Okay, so again I repeat, let's start from the financial year first. So the year end is 31st January. We take the next day, so 1st February, but the last year, so year 2000. Now let's begin reading the question. A business compiling its accounts for the year to 31st January each year pays rent quarterly in advance. So note how it says pays. We know that this is an expense. But it also says in advance, which means it's prepaid. So the treatment for a prepaid expense is going to be different from an accrued expense as we had adjusted for in the last question. And they pay on 1st January, 1st April, 1st July, and 1st October each year. After remaining unchanged for some years, the rent was increased from $24,000 per year to $30,000 per year as from 1st July 2000. If 24,000 is per year previously, then per quarter would be 6,000. Then if it was 30,000 per year next, it would be 7,500 per quarter. Alright, now let's start calculating. We want to find our rent expense, prepaid expense. Let's go back to the previous chart. A prepaid expense would reduce my expenses and therefore increase profit because it was already paid but just not incurred yet, and it's going to be a current asset in our SOFP. So let's apply that now. Okay, so on 1st January, when we pay on 1st January, we are paying for rental expense in advance. So if it's in advance, that means we're paying before the rental expense is supposed to be paid. So that means if we're paying on 1st January, we're paying for January, February, and March. Okay, but our financial year starts on 1st February 2000. So we need to think, can we recognize all of this as our expense? The answer is no. We need to again split between how much is our expense incurred this year and how much was the expense incurred from last year. So if the year end stops on January, that means this January portion was already recognized as incurred in the previous financial year. So now we should only take 2/3 of our payment. So this should be 4,000. Now we're going to continue like usual. 1st April, we'll be paying for April, May, and June. So we take the whole thing. And then on 1st July, it says the rent is going to increase. And on 1st July payment, we're paying for July, August, and September. So now we should increase our rental payment. 1st October will then be 7,500. And now let's see, on 1st January, this is the 1st January of 2000, everything else was in the year 2000. So how are we going to recognize this now? When we pay on 1st January, we're paying a whole 7,500, which is for January, February, and March. But we can only recognize our expenses now up until 31st January. That will be the expense incurred. So we can only take a month out of our total payment to include as the expense for this year. So that will be 2,500. So now our total rental expense that we have incurred and also paid will be 27,500. Now if the question had also asked, what is the prepaid expense figure? Then the prepaid expense will simply be the deduction from how much we have already paid and how much we have already recognized as incurred. So in this case, we have paid a total 7,500, but 2,500 is already incurred. The rest is still prepaid. So this is $5,000 and will be shown as a current asset in the statement of financial position. We have come to the end of this chapter. Thank you for watching.